I'm okay. Okay, I'm gonna add your screen here. So, okay, before we go into all this, first question: what if Trump gets reelected? Then what happens, in your opinion?
Well, he'll do everything he can to extend his tax cuts. It's one of the first things I believe he's going to do.
Okay, so you think that this might be irrelevant if that happens? We'll see.
Right, right. Well, it all depends on Congress and the makeup of Congress, right? He can't do it unilaterally,
Yeah.
so it all depends on what the House and Senate would do, because that's where that's where the bill would have to come from. So him
Mhm.
getting in is no guarantee of the cuts getting extended. It would significantly help. If he doesn't get elected, I believe that we're done, and that these cuts, which you're going to see in my examples, how it's going to affect everybody, are going to be enforced January 1, 2026. They will expire.
Okay, let's get into this. Take us through the slides. Oh, and by the way, if you ever have to drink your water again or something, nobody cares if you drink water on screen.
All right.
I do it all the time.
I didn't want to be rude.
That's not
All
rude.
right. So,
It's just
all right.
it's
So
just the
here,
world of
so
podcasting.
you can see is my slide on the screen. It looks good.
It's on the screen. Yep.
All right. So so instead of tax increase, tax inflation is the word I always use. And so we have to see if you can afford that, what's coming in 2026. So Trump gave us significant tax deflation, which has really benefited everyone. As I said, it's the best I ever saw in my whole career. So tax inflation is coming in less than 2 years. Now, everyone, I mentioned the word Trump. I don't want anyone having to go into a safe space and hold a puppy or, use a coloring book. Some people think of Trump this way, some think of him this way, but that doesn't matter because these are all about your numbers and your household discretionary income. So Trump's tax reductions benefit every American substantially. Remember, they're going to expire at the end of 25. So this will be substantial tax inflation for every taxpayer. In my examples, the hardest hit were the ones most helped. So you're going to see in my examples 20%, 23% increases and in the lower income strata. And that's because they were helped the most from Trump at the beginning. So all of that the rich people were helped more is a fallacy. It's not true. Relatively speaking, the rich had the least cuts of tax under Trump. Here, so this is a good example. Let's say you're single and $45,000 of income. Say you're a single mom, for example. So if we look at the left side, I'm showing you, it looks a little busy, but it's important to see. We had all these different rates on the left and the different brackets. And we see here that in 2017, that single mom would have paid 69.89. Let me go back up in tax. In 2024, they're going to pay 5,168. So the total inflation that's going to be coming is $1,821 or $150 a month. So starting January 1, 2026, if you have these particular variables of your income and your status, you're going to see a 35.2% increase in your tax bill. So that's your tax inflation percentage. Allison, does that make sense so far?
Yes.
All right, great. Next one, $75,000. So I have a single person, $75,000. A millennial's doing well here. Same kind of example. I purposely have my brackets and every dollar within the brackets that's taxed. And you see here again, there's $2,936 in 2026. This person's going to pay in more tax, 25.4% tax inflation rate, and the monthly decrease in household income, discretionary income is $245. I don't know about you, but I cannot afford this. People are strapped right now. There are people making $75,000 who have side gigs. They're still not making. So can you imagine another $245 going out of your pocket every month? Here we have a marriage. This is a representative, a good representation of my client base. So let's see what's happening here. So we have $56,000 that was used to be. Now we have only 46,085 in 2024. So they're going to see tax inflation of 10,800. I ask everyone to really look at the screen and see which one of these you fall into to see what a catastrophe you might be heading into. So the monthly decrease in household discretionary income is $900 for the family, say of four, making a total of 250. Here's married making 125,000 of income. A very similar situation. their $427 monthly decrease in income. Here's single, $150,000. Very similar situation again. But notice that the percentages start going down as you make more money because they weren't they because they were not as hard hit as the lower income. So their tax inflation is 559.39. The monthly decrease in household income is 495 a month. And here's a big one. So here's a married couple making 500,000 a year. We've been through this. We know what these numbers mean now. So they're going to have $2,178 less a month just from these changes.
Wow.
And I always put my information on the screen just so everyone can take a look at it in case they want to take a screenshot. But can I stop sharing now, Allison?
Yeah. And I'm going to share the opposite side of what you just said, just to get you to respond to it. This is from Center on Budget and Policy Priorities, maybe like a Democrat think tank. I have no idea. The 2017 Trump tax law was skewed to the rich, expensive, and failed to deliver on its promises. A 2025 course correction is needed. And these are their arguments about why. It was skewed to the rich, that households with incomes in the top 1% will receive an average tax cut of more than $60,000 in 2025, compared to an average
Can I
tax cut of
please
less than
interject? May I please interject?
Yep.
May I? Right. So this is where they're throwing out numbers that we have to look at the relative amount of savings percentage wise. So that $60,000 that was saved is less of a percentage of their taxable income than the $500 was of the lower income person. So there, yes, of course, someone that makes $10 million is going to save more taxes than someone making 50,000, but that doesn't matter. Relatively speaking, everyone got a break, but the lower income had a much higher percentage break, relatively speaking. So, yes, I agree with the numbers, but if you just look at the numbers, you're going to think the rich is getting a break. Well, everyone should get a break. Taxes are too high. So, why shouldn't the rich get something? But relatively speaking, they got the least. I do this every day since this act happened. So, this
Nice.
just shows
Good.
they're not being honest about how they present the numbers. If you went by a percentage of income item, you would dramatically see the difference and say, "Oh, the lower income people got a better break," which they did. It's completely wrong. All of this to say was skewed to the rich. It's not skewed to the rich.
Okay.
Just because they
It
got
was
more money more of a tax break does not mean they got a better deal.
okay. It's also saying it eroded the U.S. revenue base and failed to deliver promised economic benefits.
A tax cut usually gives benefits, and under Trump, things were going pretty good. I mean, now there's a lot of problems under Biden. I mean, doing this, I do business for a living, so it all depends how you use the tax cut. All depends what incentives you give. So, the tax cut is only one part of increasing the economy, and so it comes down to programs. It comes down to legislation. So, you can start with the tax cut, but the programs have to be in place to take advantage of the tax cut. And unfortunately, especially recent times, that's not been done, at least to the extent that it could be.
Okay. We are going to take some questions over on locals, more questions on locals. AlisonMorrow.locals.com. Don't forget, you can be on my editorial board, $5 a month. It's a great way to support the show. If you want to get the rest of the show, you got to be a supporter either on locals, Rockfin, and that's it. Thanks everybody who has been watching on Rumble. Really appreciate you guys. We will see you next time.
And can I make